Welcome everybody to another weekly market update. Here's where I look at the big picture and the smaller picture in terms of the stock market in terms of what it's doing. Big picture is very important to everyone because it affects your retirement plans, even your housing prices, the economy, everything. It's kind of like an early warning system, if you like, for anything going wrong or right. And shorter term, that's where more for traders, where we want to be aligned with the short-term trend of the market, up or down. So here's let's look at the overall. I usually look at the S&P 500, but this is actually the NYA, which is a composite of all the stock markets, the Nasdaq, S&P 500. Sometimes I look at this as well to get more of a bigger picture, make sure I'm not missing anything. But it's the same as the S&P 500, this picture. This is the week-to-week action here, going up and down, and then you've got the moving averages here, the average line kind of smoothing us out for it to try and get more of a feel. Blue line is the 40 average over the last 40 weeks, and red line average over the last 70 weeks. As we can see, the price is and has been for a long time literally above average, and the averages are pointing up. This is all very much a bullish picture, which is why since last November I've been repeatedly saying it's a bull market, it's a bull market, it's a bull market. Lots of skeptics said otherwise. They've been proven wrong. I just follow the market action. But what's going on now? Well, let's try, because there was a bit of a jolt this week, let's try and make sense of it and see what the market's telling us. Here's this, I mean, you can draw all kinds of lines, but this is the channel I think the market's been in. Again, you can draw all kinds of lines, but remember, the longest is the strongest, and the more touches there are, the better. So there's one there which seems to ring true. Another one there, and it's kind of been going up like that. So I think it depends on where you draw this line. You know, I mean, there's another one here. It is shorter, and you could argue, well, it kind of dropped out of it, but I don't know. So, and that's something I'm going to come on to in just a second. I think the market's at an inflection point, and as you know, I've been increasingly nervous for at least having a healthy correction. I think and I'm not the only one to think this, it's bizarre, truly bizarre, how the market has not even had one meaningful correction yet. So when it comes, I think it could be a whopper. Whether it leads to something worse or not, but I suspect it's just going to be a correction and otherwise upwards trend. But it's going to be a real, drop, whilst keeping in a bull market. It's only healthy and normal to keep things going up like that. Let's see if we can see any other clues about things that are going on here. Here's where I look at the percentage of stocks above their 50-day moving average. I'm just looking at this big jagged line in the middle here. We can see that drop that took place this week, which ties into something I said 2 weeks ago, and I've said, look, I'm seeing signs of interior deterioration in this market. I said that 2 Sundays ago, and you might have just seen the first side of that this week. You see, the picture may look like that. This still looks like a healthy upwards channel, but I'm looking at early warning indicators, what's going on inside the market. I'm seeing a lot of profit taking, a lot of money being taken out of the market. Just, as things go up, people are sucking it out again. And this one, you can see here, the amount of stocks above the 50-day moving average is falling, down to levels actually we saw April and May. So we're not it's not low yet. This thing can still bounce around like it has done before, which is why I'm saying there's an inflection point going on. Let's look at let's look at something else first. The VIX. Well, this is actually the VIX-C, which is a more easy to chart version of the VIX, which is basically the fear index. How much fear is there out there? The higher this goes up, the more fear there is, the more people literally are buying insurance for a drop. And since last November, it's been falling, as I've been telling the market's going up. Down it goes, down it goes. We had a little pop here, but on low volume, which is these little bars down here. Another pop here, not really followed through. Another one there, not really much higher and not following through much. Now it's different. We're seeing these last few days, even before that drop on Thursday, you're seeing now a rise in the VIX-C, and that's on an increasing volume. So there is now a concerted, bought with conviction, people buying insurance for the downside. So these aren't guarantees. These are clues to say, as I said 2 weeks ago, short-term trouble ahead. So that's another picture. Let's zoom in on the daily picture, day to day. And here we see that drop on Thursday, and it was been the longest drop in a long time. But the market's just been going up and up and up, so it may have seemed worse than it actually is. But no doubt about it, that weakened the market's position, and I think let's look at the S&P 500. I think what we've seen here though is that inflection point that I've talked about. If it goes further down from here, then I think the correction could be well underway. If it can bounce back from here and hold, then all it's done is just basically put off the correction for another day. Let's see if we can do a line. There's lots of lines you can draw. Remember, the longest is the strongest, and the most touches, and with those little horizontal pegs there. And just not an exact science, but you're trying to get into the spirit of it and get the feel for what's going on here. We're decoding what the market is trying to tell us. There's the trend line, and all really the market did, it's got so high, all the market did was just drop briefly below its 50-day moving average, which is the red line. It did that before, here, and so not a big deal, but every time before it bounced off of it, and so really what happens now is important. The selling was on a bit of raised volume here, but again, that's happened before. Here for example, but you're seeing a cluster of red now, and during this little week where it appeared to just be bobbing along merrily there, you saw rises in the red volume here. That means rises in selling volume. There's definitely been some insider selling going on. So there's the line in the sand there. It looks like about where it is right now, actually. It's like 2441ish, somewhere around there. If it drops below, if it closes below there on the daily, call it 2430, 2420, then I think we can expect it to go lower with a test of what is down here, the 200-day moving average. In a healthy market, healthy bull market, that's just going to bounce off. Everyone will be scared off, and that'll be it will be a good opportunity actually to get in for some new trades. If it goes below that though, then that's when and I tell you this because a lot could happen between this time and next week. If it goes below that though, then I think something more serious could be underway. I think it's a bull market. I think it's very overdue for a correction, and because of that, it could be a really scary one, just to throw off all the the late money. The stock market likes to do that, throw off all the people who are late to the party, get you complacent, and just when it seemed like a no-brainer, it will try and throw you off. The bull tries to take as few people up with him, and the bear will try to take as many people down with him. So right now, I think it's due for there's too many people on this side of the trade. The insiders know it. They're pulling out, and I say the big picture is still a bull. A short-term picture, I'm definitely waving a red flag, although we could be at an inflection point. So I will speak to you next week.